Good evening, everyone. Welcome to another weekend, the first weekend in May. Can you believe how quick this year is disappearing? All right, I'm just going to give a quick rundown on this week's action and give an overview, kind of cap it off after the week, and give you my thoughts on where we are headed next week. Okay, without further ado, we'll get right into it. And yeah, I don't know what I'm stalling for. I still gotta, by episode 1000, they say you should do something 1,000 times or 10,000 times before you're going to be proficient at it. So I will wait to go before I'll be very proficient at these videos. Have patience. Alrighty, so I'm going to start on Crude and work backwards from there. And I know I've fallen behind on my emails in the last few days, so if I haven't gotten back to you, believe me, I do intend to. Just be patient. Okay, all right, I'm going to start on Crude, and again, work from the 4-hour down to the hourly chart or half-hour chart. And we'll give you the $30,000 or 30,000 foot view on what's going on. Okay, so this is Crude, obviously, like I said, 5,000 times already. And we're looking at a 5-wave pattern, the upside in wave 5 of wave C of a corrective wave 4 to the upside. For a while now, we've had the kind of this $70 to $72 range as target, and we're right on point. Right now, over the last week or so, it's been kind of tough to figure out how that previous correction there was unfolding. This kind of sideways pattern was really choppy, very, very, very complex. But it seems to have kind of unfolded within the bullish framework. So, a short-term bullish framework. So we're still kind of eyes on for this 161.8 target here. And that would be the Fibonacci extension of wave 1 here, off the wave 2 low, which usually gives us around it gives us a reasonable target for the upside in wave 5. So that gives us a target of about 72. Kind of still work with that within that framework for next week. Let's get down to the half-hour chart to kind of parse what's been going on. See, there's that 72 target there above us. So the last couple, obviously the last 2 weeks have been this mess of albeit corrective action. Whether you could pick out what was actually happening or not, you could definitely, or the internal, let's say, structure of it, you could most definitely say that it was corrective to the side. There was the idea that this previous peak here might have been a failed fifth wave, but that's obviously been blown out of the water today with this new high. So I kind of raised the idea yesterday that this pattern off the recent low there, the low labeled wave 4, I think that's 66.85 cash. That low could have been, or sorry, the move off that low might have been an expanding wedge. So we had a kind of a 1-2 pattern to expect with a 5-wave expanding wedge in wave 1, and then a small correction in wave 2. And then today we got this almost vertical move up in a possible wave, which would actually suit, say, a wave 3 of 3, which would be the kind of point of highest momentum. And you can see here on the short-term chart, we've hit peak momentum now, and we will most definitely start to see this kind of peak out and cycle down again as we kind of hit these wave 4, 5, 4, 5 kind of pattern over the next week or so. So we should see, let's say on Monday, a kind of a completion of this fourth wave here within wave 3. Another pop to the upside in wave 5 of 3. Let's see. We should probably break the $70 mark in that case to complete wave 3. and then from there on we'll kind of drift sideways, maybe one last high, with within the range of 70 to 72 again. So for next week, probably a succession of corrective lows again. You'll see we have 3 peaks here in the 69, kind of 69, 50 range, 69.30 maybe. So we'll probably see the bottom of both wave 4s in about that 69 to 69.30 range there. That just gives us a nice little shelf of support there. And then later on, maybe next week, we should see a pop again to the upside in wave 5 of 5. And that should close out the larger pattern. 5 waves up in blue. And again, from that point, we can expect a turn down to a longer term downtrend again. Okay, so let's move on to gold. Gold has kind of been betwixt and between for the last couple of days. Here's the 4-hour chart. Obviously, this is another corrective pattern off the kind of January high there. I think it was 10th or 11th January. We had this recent high, the most recent high. And then ever since then, it's just been this maelstrom of corrective action, and the price has relatively gone nowhere. So we're back into the lows again, and these are, we've had like 3 kind of spike lows here in the 1300 range. So we're back into that 1300 range again midweek here, and so far we've bounced off that. I don't think that this is complete right just yet, and I'll explain why in the short-term chart. We might just get one more pop into the 1295, 1296 region before this completes. Again, I've been talking about this momentum setup again. Here we are. We've just kind of lingered in the lower half of momentum within MACD and RSI. And again, recently over the last, when was that? Say the last month. It's just, well, 3 weeks anyway. It's just been pinned to the floor basically. There has been a kind of a slight divergence in MACD, but most definitely in RSI. You see, actually today we've got the initial part of a bullish signal there in 4-hour RSI with the pop to the upside over the center line there. So the price will follow. The momentum setup is looking bullish. We've got a nice divergence again off this tail end of this MACD line here, off extreme lows, and like I said, it's been pinned to the lows for the last 3 weeks, let's say. In general, I think this is a pretty large hint that we are bottoming right now, that the price is bottoming right now. Whether we're at the actual price low or we get one more spike lower, I suppose it's kind of splitting hairs at the moment. If you were a physical gold buyer, I'd be going out buying right now. As for the tradable low, we'll probably see that develop over the next week. Let's go down to the short-term chart. So this is the hourly chart. I have this previous peak here at about 1317, the high 1317s marked, and then again these 2 other previous peaks at 1325 and 1355. These would be the corrective highs, let's say, within this final wave C to the downside. You can see off that, off the most recent low, 1302.08, I think. I have that marked anyway. So that might have been that was the cash low, 1302.08. Off that, it's been very corrective. Even the decline off the high has been corrective again. So we might be working on possibly a flat correction. This wave 4 label may end up over here at again that kind of mid 1320s level. So we have like 3 waves up, 3 waves down, and possibly a 5-wave pattern developing off around today's low. So we could have 5 waves up in an internal C wave here. So that would make it a flat pattern. So 3 waves in A, 3 waves in B, and then 5 waves in C. We'll see how that works out. I can't see any other way of counting that as a, let's say, a bullish impulse wave to the upside. It looks very corrective to me. So hence the reason why I think we'll have another break of that short-term support there. Possibly down into this larger trend channel here, and that trend channel would be this trend channel of the this whole combination wave in wave 2 here. So for early next week, I'm kind of I'm still leaning towards one last break of support at 1302, possibly into the 1295, 1290 area to complete 5 waves down in 1, 2, 3, 4, and possible 5 waves down in wave C. But again, the medium to long-term outlook is exactly the same. It's most definitely bullish, and all we're doing here is kind of trying to tie up the loose ends of the end of this whole corrective pattern. All right, so let's go on to this is the man of the moment, the Dow. So we moved up this pattern here during the week just because it kind of, the internal wave structure here just kind of suited a larger, let's say, labeling, excuse me. Like I said before, you don't actually know when a market breaks and starts turning back down, back up or back down. You really don't know how, at what degree the initial wave or the initial, let's say, structure is developing at. So it's kind of like it's a suck it and see type of thing for the initial stages, and we're still in the initial stages of a turn down into a bear market. Like this, in my mind, this bear market will be a long, arduous, drawn out affair. Within the kind of 3 to 5 year type of scenario. So better get comfortable with it. I have a kind of an idea about what might be happening right here. We could be seeing a larger wave 2 in green here. We might be seeing, let's get our crayons out, our markers out. We might be seeing A, B, C pattern, let's say a flat pattern, larger flat pattern in wave 2 green, and then a breakdown, into wave 3. Again, this is all to be revealed, I suppose. The short-term action still counts favorably as a build-up of 1-2 patterns to the downside, and we'll go down to the short-term chart right now to give us the lowdown on that. Now there's our initial wave 2 green with the possibility of another alternate wave 2 green over here. If that's the correct pattern, the reason I'm kind of playing with that idea is because the recent kind of spikes to the downside sit nicely within this this downward facing trend channel here, and so far we can see 3 waves within that structure. So this could be a larger wave 2 developing. So we have 3 waves up in A, 3 waves down in a possible B, and then maybe a 5-wave pattern in wave C. And so far, you can definitely count this move off the low as a 3-wave pattern, or we could even be looking at a developing 5-wave pattern up. For the moment, I see no reason to shift to that alternate viewpoint right now. We may get that early next week, but I would still, we have key resistance there of 24,857, so I'm still kind of between two fences on this. The action does it does suggest that we could be seeing a larger corrective pattern unfold. But until we get a break of these previous um, initial resistance, let's say at 24,495 there, that was the previous high, labeled wave 2 here. So until we get a break of at least that level, we won't be shifting to that kind of larger, let's say, flat pattern in wave 2 to the upside. And you won't actually get any confirmation of that until you actually get a break of that higher 24,857. As for the current pattern, I can obviously you can never be 100% sure, but I can still count wave 1 down in green, wave 2 up in green. I can count wave 1 down in gray and wave 2 up in gray. I can count a possible wave 1 down in pink and wave 2 up in pink complete. What we would need to see on Monday would be a breakdown again in a further 1-2 pattern in an unfolding third wave at probably 4 degrees here, so that it kind of gives you let's say a perspective on how large the pattern is that's developing right now, that it takes so long for this third wave to develop. So we're looking at this, even if we count these blue labels here, we're looking at a third wave down in blue, and above that we're looking at a third wave down in red labels. So that's 1, 2, 3, 4, 6 degrees of trend right there that we're counting between the two charts here. So you can kind of forgive, let's say, the price structure for taking its time on moving down. We always want everything so quick. We want everything to happen so quickly and just get into it, get into the meat of the matter quite quickly. But these things take time. I haven't changed my mind at all on the fact that I think this market has topped out and we're ready for some pretty serious moves to the downside. So for next week in the Dow, if we get a break of 24,495, that would be the previous wave 2 gray, then we'll start shifting towards the alternate pattern. But as for Monday, we've got a very overbought market right now. I think with the last couple of days of incessant buying. So we'll probably see at least a cooling off on Monday. And if we get a breakdown again below this declining trend line here, then we'll stick with the operating wave count. And what we'd look for in that would be a further 1-2 pattern, as a further impulse wave to the downside before we move into a third wave down. Okay, so let's move on to dollar yen. This is the 4-hour chart dollar yen. So far, so good for this pattern. I think the dollar has pretty much proven everybody wrong over the last few weeks. Whereas punditry in general was expecting an further acceleration to the downside in the dollar, and then the dollar just stuck the middle finger up at everyone and started rallying. Conversely, I think this move up in the dollar is the initial stages of that kind of move into a fear scenario within broader, let's say, stock markets and the bond market. So we have kind of I'll be preparing some charts for an intro over the next day or two to show that in Europe, if you look across, you can go and see this yourself. If you look across the major European economies, the top 5 European economies, you can see a very large divergence higher in 10-year yields, and it has been going on for 6 or 8 months now, which does not augur well for, let's say, the outlook, the continuously bullish outlook on Europe. I don't have that view at all whatsoever. I think this move up in bond yields is reflected kind of in the shudder in stock markets across the world, and it's reflected within this rally in the dollar as well, as we see the kind of flight to safety beginning with people moving back into the dollar and out of the riskier assets. And those would be European bonds. So anyway, enough of that crap. Let's get down to the pattern. Let's get down to the wave pattern. Excuse me, I get lost talking to myself. Okay, so the 4-hour chart shows a developing 5 waves up in a possible wave 1 grey. So we've got wave 3 complete earlier on, or during the middle of the week, and we're moving down into a possible 4th wave here. So we should see, this is the 4th wave here, so we should see a 3-wave pattern within wave 4, target still above kind of 108 area. That kind of, it's pure speculation at the moment, but if you do count this decline over the last couple of days as an A wave, then you should get a 3-wave pattern, a nice, let's say, 3-wave spike higher in wave B here, and that'll probably top out on Monday about the 109.40 area, and then we'll get commensurate move down in wave C. I think that should bring us down to the lower trend line here at about 108, maybe 108 to 108.50. Probably at least a break here of the wave A low, which was 108.94 today. That spike higher today is probably part of a 3-wave pattern up in wave B, all to be revealed on Monday. We don't know exactly how this corrective move is going to play out just yet, given that you can count this as a pretty clear 5-wave pattern down in A. You would expect a larger zigzag pattern to play out in wave 4. So that would be 5 waves down, 3 waves up, and 5 waves down. So for Monday, and possibly into Wednesday next week, we're going to see a completion of this 4th wave, which should remain above support there, which was the previous wave 1 high. That would be the invalidation point for this wave count. So that would be a high of 107.08. So early next week, completion of wave 4, green, and a further spike higher in wave 5. All right, let's move on to the transatlantics. So we have pound dollar here. Pound dollar seems to have completed more or less wave 1 to the downside, and I think we could be on an expanded flat wave 2 right here at the moment. You can see here today, over the last day or two, we've had a series of breaks of the previous wave 1 here. So that wave 1 high was key resistance, so key support. So we've got a break of key support today, a pretty conclusive break of key support, and we're still below that as the market closes or comes into the close. So I think we can pretty much call the rally over the last few years since kind of summer 16. We can call that complete right now, because we've got a break of that key support there. The next level of significance below that is 130, around the 130. It's not exactly what I've marked there. It's around 130.40, and that would be the previous wave B low here. We've got 5 waves complete to the upside. We've got a nice 5-wave pattern to the downside. Now we need a 3-wave pattern to complete wave 2. We've got the bearish downside cross here of the 50-period moving average below the 200. So we've got that death cross. We're oversold at the moment. We'll probably see a correction and probably a test of the, let's say, at least the center line here, and maybe a spike up towards overbought again in wave 2. But for the moment, we're looking pretty bearish in pound. Let's get to this is the 30-minute chart here. The current pattern within a possible wave 2, we have wave 1 down complete. We can see that wave 1, 2, 3, 4, and then an extended wave 5 to complete wave 1. Let's get rid of that color. We could be operating within wave 2 here. possible wave A up, and then maybe a triangle wave B, and then a wave C. So a 3-wave move in wave B. Wave A up, complete. Wave B possibly complete, and then a move again higher in a wave C. We could see 5 waves higher in wave C or 3 waves higher. We just don't know just yet. But it looks like this is all part of the same corrective move. I think it could be a kind of a complex expanded flat correction higher. We'd probably target in around this kind of cluster of prices here. So you'd be looking at maybe mid to high 137s to complete. Okay, that's for next week. Early next week, we could probably bank on a rally higher in a possible wave C of 2, with an initial target about the 137, mid 137s to complete. After that, we'd have 5 waves down, 3 waves up, and we'd be looking for further confirmation to the downside. And you probably get a very nice tradable high, lower high in that off the wave 2 high. Okay, so let's go to euro dollar. Euro dollar has pretty much turned, I think, also, even though we were, I have to say, hands up, I was quite baffled by the price action over the last month or so in euro dollar. But it seems to be kind of unfolding most definitely in the bearish, on the bearish side of the equation. Also, like cable, we've had the same momentum sell signals, technical sell signals. We have a series of 1-2 patterns and moving down rapidly in a third wave as we speak. And we've got an unfolding 5-wave pattern within wave 3 here, which is it'll be probably closing out by the end of next week, a third wave down. And we should see, again, we have a break of that previous wave 1, as you can see there. This previous wave 1 green here at 119.64. We're going to conclusive break of that today again, just like cable, break of that key support there. The next key level is at 115.50, and that would be the previous 4th wave here at 1 higher degree. So the reason wave 1 is important, the previous wave 1 is important, is because it rules out the idea that a larger 5-wave pattern would be developing to the upside. So if we get a break of wave 1, that means that this low cannot be a 4th wave within a larger unfolding 5-wave pattern. So I think we're pretty solidly in bearish territory here now, and we're moving down within this third wave in green here. It's early to say yet. We have initial targets at about 118, low 118s to complete that. That's given by this Fibonacci extension here. So we're still eyeing the 118 area to complete wave 3, and then we might get some sort of corrective pattern within wave 4 green. All right, so let's go down to the short-term pattern again. So it looks like we're tracking a third wave down here in green, and that breaks out into wave 1 down, wave 2 in brown, and then we have this third wave down here in brown labels here. And over the last couple of days, we've had this contracting range here, so we can call that a contracting triangle, possibly within wave 4 brown. So for the moment, we could probably say that the move out of that triangle is the beginning of wave. Let's get a label on that right now. So we can say that this move down out of the triangle again is the beginning of wave 4, or sorry, wave 5 brown, and that again should complete 5 waves down. 1, 2, 3, 4, 5 down. like I said, the low end kind of initial target would be the mid 118s there, and we're very close to that now at the moment. So for next week, if wave 4 brown is complete, then we should see a further 5 waves down within wave 5 brown, and at that point we'll get some trend lines on that. At that point we have a larger wave 1 complete. So let's go out to the 4-hour chart again. Oh, sorry, a larger wave 3 complete. So we've got 1, 2, and then a wave 3 down, correction wave 4, and then we should see a further decline, definitely below 115 in a wave 5. So early next week, or for next week in general, we should see a completion of 5 waves down within wave 3 green. And at that point, then we'll be expecting some sort of corrective wave, possibly a triangle again, because it's a 4th wave. You could kind of expect a triangle. I think that's me. That's done. Well, that was longer than expected, as usual. But I hope you all have a great weekend. The weather's actually turning nice here again in Ireland. If you're in Hawaii, God bless you. I hope you get through this volcano in good health, and hope you can make it back here on Monday evening again. Godspeed, everyone. Have a great weekend. See you Monday.